Couple of things, and they have been already mentioned. The first one is scale, obviously. What we've learned, our experience, that scale is important to both sides of the equations, to our customers and to our investors. It gives them, the broad exposure that that they would like to have, and which is in a way a defensive play. So scale is important, and then the quality of the platform where you're investing is also important. The track record, the number of customers that you'd have, and then your future prospects for growth. And today, to just jump on the capital values, yes, capital values for logistics have not recovered, slightly been up since the downturn. Supply is at virtually zero. Vacancy is going down. I think we believe the prospects are good for good rental growth story. Even if nothing happens, just because of this demand-supply dynamics. And capital values will probably continue to go up, driven mainly by rental growth. I wouldn't mainly, see cap rate compressions at this stage, especially if the 10 years bonds are starting to go up. Maybe the spread will reduce, but maybe cap rates generally will remain where they are. Maybe around the edges in core markets will go down maybe a little bit, but mainly rental growth.
From our perspective, there is definitely much more interest going on from all sorts of places around the world looking at European logistics generally. And Joseph made a good point about track record. I think there's track record for the sector, and then there's track record of the operating partner potentially. And it's taken, let's say, 10 years. I think the IPD are running their numbers off for the new benchmark, and have been running their numbers off a 10-year basis, a track record. But it's taken that to provide an evolution through the cycles and provide now, I think, a pretty clear view from most people in the market, kind of pricing transparency, where the asset class can trade relative to other sectors. And I think we had to go through the downturn, and I know everyone was kind of sat there going, well, actually, where do we price this stuff? And it seems to be, for reasonably good stock, or pretty average stock that makes up the majority of these portfolios in the kind of 7 to 8% range, and then moving out once you get into more non-core or short leases or risk assets, and everyone seems pretty comfortable that kind of makes sense. And I think that now that there is that track record, and the portfolios and managers that are out there can demonstrate 5 to 10 years worth of renewal rates, occupancy rates, tenant churn, most of those numbers across the portfolios and guys that we talk to are really impressive. Vacancy rates of 2 to 5% at most, renewal rates of 80-85%. That is relatively de-risked when you take it out and look at it at a portfolio level beyond specific locations. That is a relatively de-risked kind of profile to any kind of portfolio. And I sat at Expo at one of these things last year, and I made some kind of bold statement about how many billions of euros we thought was shuffling around behind the scenes through the kind of capital structures of most of the investment vehicles that are out there. Over 15 billion euros that's kind of in play or being talked about. And I think that in the last quarter and at the start of this year, there has been some pretty key examples of new capital being allocated to the sector, which is exactly what we were anticipating last year. That trend is going to continue. There are some big deals being undertaken by people in this room. If any of them want to comment, great. Which highlights that trend exactly. And we can probably point to 3, 4, 5 billion euros of change in ownership of vehicle or portfolios, and I reckon a similar amount will happen in the next kind of couple of quarters. That is a major structural change, I think, which hasn't happened in the preceding 5 years, and will impact how people get access to stock. So you can talk about needing, a precise location, a certain building type, and all the rest of it, and that's lovely. But you'll never get your money into the market, potentially at the rate you need to, depending on the size of your vehicle, etc., to compete on the scale of the big guys in a market that is going to become increasingly supply constrained, I think, unless you're talking to the developers who have got a supply of new stock. And there are increasingly few avenues you can go down to get access to the sector in a meaningful way, where you've got that risk managed.